Yes, my dear friends, a very, very happy morning. How are you doing, all of you? Yes, hi, good morning, good morning. Okay, so just a quick revision of what we did yesterday. Very, very quickly, we will just recap quickly, then we will move on with today's session. So, we spoke about the pillars of what do you say, law, how law is framed. So, when we have legislature, judiciary, executive, and we understood the entire structure of the Income Tax Act, who does what, etc. And we saw a couple of definitions that what do you mean by means. When in the definitions, the components of definition, so to speak, what do you understand by means, what is a proviso, and all those things. And especially Finance Act 2025, how it works. What is the previous year? What is assessment year? All that we saw. So previous year is from 1/4/2025 to 31st March 2026, and assessment year will be 1/4/2026 to 31st March 2027 is what we saw. And then we understood the meaning of income. Income is nothing but the manner in which it is laid down. And income definition per se we didn't see, but we saw the manner in which it is laid down and the entire structure of the heads of income and all those things. And the concept of citation, case law, how it works, etc. Then, of course, the what do you say? Nautical miles. What is India? 12 nautical miles and up to 200 nautical miles. Concept of economic zone, continental shelf, and territorial waters of India. What we understood. And of course, we saw the tax rates. We understood the tax rates of the old tax rates, new tax rates, etc. And new, what is the change? It's very easy now. Up to 4, 4 to 8, 8 to 12, 12 to 16, 16 to 20, 20 to 24. And it's become very simple, honestly speaking. So then it becomes what? 5%, 10%, 15%, 20%, 25%. Again, 5% increase. So that's how it is. And we try to understand the difference between the old regime and the new regime, optional regime and the new regime. New regime, the basic exemption limit is up to 4 lakhs. And now in the new regime, we have the 7 slabs, so to speak. And the rebate also has increased. Amount up to 12 lakhs, there is no tax. Earlier, up to only, what do you say? Even in the new regime, just previously, it was only up to 7 lakh. Now it has increased to 12 lakh. Anyway, in the old regime, rebate is nothing, peanuts. It's only up to 12,500 rupees. Maximum amount is 5 lakh. That amount was 7 lakh in the 115 BAC Finance Act 24. In Finance Act 25, what did they make? 7 lakh has become 12 lakh rupees. And rebate amount has increased to 60,000 rupees. Chapter 60 reductions is available for old regime. New regime is no very limited chapter 60 reductions. And again, surcharge also there is less. Surcharge is just 25% in case of new regime. Then the MMR, the maximum marginal rate, the rate at which you will now, what do you say, the highest tax slab is 39%. We understood the concept of surcharge. We understood the surcharge concept where only for 111A, 112 and 112A we have the surcharge concept, and it has been reduced to 15% for the specified income. So we saw 5 scenarios. Situation number 1, all inclusive does not exceed 50 lakh, so there's nothing. Second one, all inclusive exceeds 50 lakh less than 1 crore, 10%, 10%. All inclusive more than 1 crore less than 2 crore, 15%, 15%. Situation 4 and 5, total income excluding specified income exceeds 2 crore but not more than 5 crore. One more, total income excluding specified income exceeding 5 crore. So in that case, situation 4 and 5, on the other hand, surcharge on the amount of income tax and other income is all 25%. And situation 5, surcharge for the old regime is 37%, but in the new regime it is 25% for other income. But for the specified income, I told you, because dividend etc. was not taxed before, capital gains was not taxed before, suddenly you're taxing it. The people went and told, okay, you are taxing it, no problem, we'll pay the tax, but at least surcharge, please give us a discount. So they have capped it at 15%. Then there was one additional situation where they said that all inclusive, it is more than 2 lakhs, 2 crore. For that, what to do? There also, maximum surcharge is capped at how much? 15%. This is what we saw yesterday. Rebate also we saw. Right? Everybody with me on this, my dear friends? Right. Next, quickly, you will understand. And I told you the amendment sheet is also given so that everything is covered. So one day before the exam, all you need to do is keep checking these things. That's all. Right? Make the changes in the books here and then just keep changing because that's easier for everyone. And one day before the exam, it becomes very simple for you to study. This is based on the feedback, is what we've been doing. Next changes are only in the TDS and then here tonnage taxation. Yeah. Then it's only in capital gains. There's no much change, honestly, in the PGBP, etc. There are no changes. Only in the what do you say? Capital gains, there are a few changes about it. I've given where to put, what is the rationale, everything, including the page number I've given, so it becomes very easy for you to understand. Now, coming to page 812. Coming to page 812, we'll just see the rates for other things, rates for cooperative societies and all those things. So guys, cooperative societies rate is up to 10,000 rupees, slab rate again 10%, income 10,000 to 20,000 20%, above 20,000 30%. Very simple. Surcharge is always at 7%. The total income exceeds 1 crore, but up to 10 crore. And if the surcharge, if the income exceeds 10 crore in a cooperative society, then surcharge is 12%. And there is also, just like 115 BAC, we have 115 BAD for cooperative societies, where instead of 30%, there is a concessional regime of 22%. And 115 BAE also, subject to certain conditions, concessional regime of 15%. Hardly anything tax, 15%, that's all. This is the gist of the story. Local authorities, again, like your BBMP and your Greater Madras Corporation, GMC. BBMP is Brihad Bangalore Mahanagara Palike, which is your local, what do you say, development board. So, yes, local municipality, so to speak. So, those people have to pay tax at how much? 30%. 30% is what they have to pay. Surcharge is leviable at 12%, income exceeding 1 crore. There is no 7% and all, directly 12%. Companies, just make one change here, previous year 23-24. So this is for previous year 25-26. This is for previous year 25-26. Firms and LLPs, tax rate is 30%. Surcharge, if the total income is up to 1 crore, nil. Greater than 1 crore, up to 10 crore, 12%. Greater than 10 crore, 12%. So for firms and LLPs, since the tax rate is high, surcharge they have kept at 12%. And up to 1 crore, it is nil. In fact, no much advantage for firm and LLP. On the other hand, for domestic company, where the total turnover or the gross receipts during the previous year 23-24 if it is less than 400 crores. So you just have to see 2 years before. For 25-26, it will be 23-24. Just 2 years before. For next year, previous year 26-27, it will be previous year 24-25. So I need to see, standing for previous year 25-26, I need to see my turnover in the year 23-24. Turnover in the year 23-24, if it is less than 400 crore, less than 400 crore, then what will be my tax rate? Reduced tax rate. How much? 25%. It's a benefit that I am giving. Right? Turnover in the year 23-24, if it happens to be less than 400 crore. It's a benefit that I am giving. That's all. So it will be how much? 25%. So if my previous year 21-22 it is 1000 crore, no problem. 22-23 it is 800 crore, no problem. But only in 23-24 it happens to be 300 crore. Then in the year 25-26 I'm gonna get the benefit of 25%. So will it change year on year? 100% yes. Because next year, previous year, let's say 26-27, I'll have to check the what do you say, turnover or gross assets of 24-25. That time, if it is more than 400 crore, I will not get the benefit of 25%. It's just the ease of doing business. I want to support businesses, especially who are just starting out and have less turnover. According to government, less than 400 crore is very less turnover. So for them, they are telling, okay, no problem, pay 25%. No issues. Got it? Domestic company other than the above, then it is 30%. I told you, if you are a normal company other than that, 30%. And you see, guys, there is a benefit. Surcharge, it is 1 crore to 10 crore is 7%. About 10 crore only, it's 5%. For both these things. Foreign company, on the other hand, tax rate is 40%. Up to 1 CR, nil. See, surcharge if total income is 1 crore to 10 crore, then more than 10 crore. 1 crore to 10 crore, it is 2%. More than 10 crore, 5%. Why is the surcharge less here? Because they are paying a high tax rate. They are paying a high tax rate. And guys, mind you, this 40% also has been amended. Foreign company, 40% also has been amended. We will discuss that later. So it's not exactly 40%. We will see that. Okay. But surcharge has not been amended. Surcharge has not been amended. So for now, you can put a star here. We will discuss this. This is 2% and 5%. Next, marginal relief. Marginal relief. right? So this you can say 35%. This is a retrospective amendment, right? Retrospective amendment. They said, let's go back from before and change everything. Because more and more foreign companies, I want more and more foreign companies to come and invest in India. So I'll have to give them benefit. But this remains unchanged. Still 35% is more than 30, right? So this is the change. But then again, guys, our concessional tax regimes 115 BAA 22% and new domestic manufacturing company 115 BAB 15%. Last concept is a concept called marginal relief. Marginal relief. What is marginal relief? Very simple. So let's say there is a person called Onion. I don't know how many of you have watched that Tamil movie Onion. Very old movie. Let's say Onion is earning 50 lakh rupees. I'm just taking the old regime now. Old regime. Onion fellow is earning how much? 50 lakh rupees. Right? So up to 10 lakh, it is 1 lakh 12,500. Up to 10 lakh, he has to pay tax of 1 lakh 10,500. Normally, we have calculated up to 10 lakh, that much it comes. And for the remaining 40 lakh, he will have to pay 30%. This is the old regime. That 0 to 2 lakh 50, 2 lakh 50 to 5, 5 to 10, that one. So 40 lakh, you'll have to pay 12 lakh. Overall, 13 lakh 12,500. Next, you have one more fellow, Ambi. Amazing drawing skills, correct? Yeah. So Ambi, it is, that fellow is also earning 50 lakh 1,000. That's all. 50 lakh 1,000. So for him, on 10 lakh, he has to pay 13 lakh, sorry, 1 lakh 12,500. Then the remaining 40 lakh, 40 lakh, he's paying how much? How much extra? 12 lakh. How much will it come, guys? For 12 lakh, sorry, 40 lakh 1,000 into 30%. Yes. 12 lakh 3,000. But unfortunately, since it is crossing 50 lakh, surcharge will come. 10% surcharge on these two. 10% surcharge on 13 lakh. Correct. Unfortunately, 10% surcharge. So after surcharge of 10%, how much is the overall thing? It is 14,44,080 rupees. Yeah, 131280. That's a surcharge. Crazy. So overall is how much? 14,44,080. Imagine guys, by increasing your income of just 1,000 rupees, you are paying this much extra tax. Actually, you are paying 14,44,80 minus 13,12,500. Correct? You are paying this much extra. You are paying how much extra? 131,580. Is that the extra part that you are paying? How much are you paying extra, guys? 131,580. Yes. So for 1,000 rupees increase in income, tax has increased by 131,580. Crazy. So I will go to Nirmala madam and say, Madam, you only do one thing, up to 50 lakhs. It is 13,12,500. Okay, madam, I'll pay this. This extra 1,000 rupees you only keep, madam. I don't want to keep. Please keep that extra 1,000. I earned it for you only. Gift, you take it. I will just pay 13,13,500. 13,13,500 I'll pay. Instead of paying 14,44,80, madam, I will just pay 13,13,500. The difference between the two, 14,44,80 and 13,13,500. 14,44,80 and 13,13,500. 14,44,80 and 13,13,500 is 1,30,580. Correct? That all comes from 1,000 less. This will be my marginal relief. This will be marginal relief. Say, please, I will not pay so much. This is all I have to pay. Please. Correct? I will not pay so much. This much only I will pay. This is the concept of marginal relief. So first, whatever income they have given, I should calculate tax on that. That is, I have calculated. Then I have to calculate tax on the nearest surcharge rate. Nearest surcharge change is 50 lakh. And then I have to calculate the difference between 50 lakh, 1,000 and 50 lakh. Then I have to see what is larger. This is higher or 50 lakh ka tax plus the difference between the two. If I add, which is higher. In this example, 14 lakh 4480 only was higher than 13 lakh 13,500. So if this is higher than this, the difference between the two is marginal relief. So there's a structure and a format. That format only is this, but the concept is this. Format is this, you see. This is the format. First, I will compute tax on total income. What was my total income? 50 lakh 1,000. Then I will calculate tax on surcharge limit just before the slab rate shifts. That is, I will calculate tax on 50 lakh. Then I will do what? Restricted amount. Restricted amount is this one. Tax on 50 lakh. That is 13 lakh 12,500 plus the difference between the total income and the surcharge limit. That is 50 lakh 1,000 minus 50 lakh. That 1,000 rupees extra. The tax payable will be what? Step number 1 or step number 3, whichever is lower. Step number 1 or step number 3, whichever is lower. What we did now. Which is lower? Whatever we calculate, that is only lower. So the tax payable will be step number 4 plus higher education says 4%. Marginal relief will be step number 1 minus step number 3. That's what we saw. What is the marginal relief? That 1,000 extra I'll pay. The difference between the two. 13 lakh, 14 lakh 4480 minus 13 lakh 13,500. The difference between the two 1 lakh 30,580. This marginal relief. Understood, guys? Everybody with me? Yes or no? Thumbs up. Just say yes or no, whatever it is. Did you understand? Easy. Okay. Right. So if you see here, income definition. Income definition is 2 clause 24. Soumya, did you understand? You have not responded. Give me yes or no. Income is defined in 2 clause 24. Okay. So everything, guys, you see, includes. It's an inclusive definition. Whatever you know about the meaning of income, that is income. Anything that you earn, whatever you do, that is anyway income. Apart from that, other things also will be income, is what they're trying to tell. So it's an inclusive definition. In case you don't know what is income, everything that you earn is income. Apart from that, if you still have doubts, these things also will be income. Profit and gains, dividend, export incentive, interest, salary, bonus, commission, capital gains chargeable, profit and gains of business, everything. So another concept of diversion of income and application of income. So diversion of income, application of income. You will get some money at the end of the month, 20,000 rupees. You will say, in that 5,000, I will give it to my parents. Is it diversion of income or application of income? Obviously, application of income. You will get 30,000 rupees. In that 5,000 rupees, you will go and eat one nice meal at a restaurant. Very dining, 5-star hotel, you will go and eat. Is it diversion or application? Application. Right. You will go to your company and say, sir, you have to pay me 30,000. But sir, rather than you paying me 30,000 and me paying my parents, do one thing, sir. Why don't, is it possible for you to pay my dad 10,000 and me 20,000 remaining? Is it diversion or application? That seems to be diversion, but that also is application of income. Because I'm going and telling that person. So what exactly is diversion of income there? Diversion of income is something which happens at the source itself. And on something that you generally, it may not be voluntary. It may not be voluntary. Mostly it will not be voluntary. It predominantly will be court mandated. It overrides your title. You will not have right over the money. That is called diversion. Everything else is application. Me going and telling my boss, instead of me, you pay that person only. That is still application actually. Because rather than you paying me, I'm applying directly to my parents. You see, employee cannot avoid tax on salary by merely instructing his employer to contribute his salary fully to a charity. That salary will still be taxed. It is not diversion. That is just application. Sir, I don't want to pay tax on this amount. Instead of me, pay my mom directly, pay my dad directly, pay for charity directly. No, I cannot do it. It's my income only. It's rather than you paying it to me and me applying it, I'm asking you only to apply it. But what is diversion? Diversion happens from the source itself. This is the example. Sir X inherits a property subject to the right of residence in favor of his mother. So I am inheriting my property from my mom. Any amount paid out of sale consideration of such property to the mother for relinquishment of her right to reside should be considered as diverted at source. So there in the will they would have written, let's say my dad had the property, it has gone to my mom. Let's say my dad is not there now, my mom has the property. And mom now inheriting it. But in that there is one clause. The clause says if the property is sold or if any income is generated from the property, 20% has to go to the mother. No questions asked. Until she dies, 20% should go to her. So if I give it on rent, 20% should go to her. If I sell it off, 20% should go to her. 20% should go to her for sure. At the title itself, ownership, I do not have an ownership of 100% because the will says 20% has to go to whom? The what is a mother. So this is an example of what? Overriding at source itself. Source only it is overridden. Yes or no? In this case, tomorrow if I earn 1 lakh from that, 20%, 20,000 will automatically go to what? 20,000 will automatically go to my mom. This is overriding at source. Understood, guys? So I will never be earning anything. 20% will directly go to my mom. I'll be earning 80%. Do I have control over it? No, it's a will. So is the income diverted? Yes. How much do I have to pay tax on? 80% or 20%? Oh, sorry, 100% or 80%? 80%. Because at 20%, I do not have a right on that income because it's from the source only, it is diverted. I'll have to pay, yes, correct. I'll have to pay only on 80%. So this is the concept of diversion of income. That's about it. Simple, nice or no? Yeah. Good. So this is regarding all the basics. Simple.